Good morning and welcome to the Killik & Co market update. This week has been a big one for inflation data, and we've had the latest numbers out from both the UK and the US. Both numbers came in below expectations. The number for the UK was 4.6% and the number for the US was 3.2%. On this 10-year chart here, you can see just how much these inflation numbers have come down since their peaks in 2022. These lower inflation numbers mean that interest rates are now less likely to go up even further, and stock markets have been happy this week as a result. Here's the MSCI World Index, and you can see it's had a nice rise since the end of October as interest rate expectations have lessened. We've previously talked about the impact of interest rates on alternative income assets such as commercial property and infrastructure investment trusts. Investors were piling into these when interest rates were low because these assets pay attractive levels of income, and at the time it was impossible to get a good return on safer assets such as cash and government bonds. As interest rates rose and the return on these safer assets improved, investors ditched these alternative assets and we saw some significant share price falls. However, now that the interest rate cycle is thought to have peaked, we're seeing investors returning to some of these alternative assets. We've talked about the struggles of the offshore wind industry in a few recent videos. The cost of building an offshore wind farm has risen a lot in the last couple of years, squeezing the profit margins of many developers. Developers are not going to commit to building new wind farms unless governments will guarantee a sufficiently high price for the power that will be generated when these wind farms are complete. In the UK government's last auction round, known as AR5, it tried to auction off some new seabed leases and it offered a price of £44 per megawatt hour, and it did not receive a single bid. It's just announced that in its next auction round, known as AR6, it will offer £73, and that's an increase of 66%. It's been a very difficult couple of years for this industry, but share prices did respond positively to this latest announcement from the UK government. And finally, it's always good to finish on a bit of good news, an earnings upgrade from TJX, which is the owner of TK Maxx. TK Maxx is what we call an off-price retailer, and it appears to have done well during the cost of living crisis because consumers have been on the lookout for lower-priced items. As you can see here, the stock has outperformed the S&P 500 index by quite a margin over the last 3 years. So do give us a call if you'd like to hear about this stock in a bit more detail. Next week on Tuesday, we've got results due out from Nvidia, and these are very highly anticipated given the strong performance of the stock over the last couple of years. That's it from us. Have a great weekend, and we look forward to seeing you next Friday.